Today is the 29th of November 2025, and in this video, I will be showing you why the stock market is going to crash, and it's going to crash quite aggressively going into December. Everyone's expecting a Santa Claus rally, and I'm going to show you exactly why that will not be taking place. Okay, so first and foremost, what the market is currently doing is it is inducing buyers into the market. And when I say inducing buyers, what I mean is, if we take a look at the chart, what we can see is that in this level here, we have had a sweep of liquidity, and this sweep of liquidity has not been met by the sort of displacement that we're looking for. And what I mean by that is, on this candle right here, we had a doji candle, and then on Friday we had what I like to call, it was a rally, but what happened was on Friday it was shorted in trading hours, and so we have to disregard this candle. This candle does not actually represent true indication of what institutional investors were doing on Friday, as most institutional investors were away from their desks. I didn't trade on Friday, didn't trade on Thursday either, and so these two candles are relatively irrelevant. In a sense, they're irrelevant. Okay, so moving forward, we had a sweep of liquidity right here. This is a liquidity level that has been swept. We know this because market shifted into an uptrend here and then came down and then rallied higher to target our level of external liquidity. Okay, and so the reason why we know that this is a sweep of liquidity is because when we get a sweep of external liquidity, which took place here and targeted this level, we know that we should expect some sort of displacement and higher. By displacement, all I mean is aggressive price action. But these 2 days, these 3 days really, this entire week that just went past, we have to sort of disregard it, considering the fact that we had Thanksgiving holiday on Thursday, and then on Friday was short on trading hours. And so these 2 days aren't relevant. Wednesday was in anticipation of that date as well. And so pretty much Wednesday, Thursday, Friday, we can disregard these candles. My belief is that we're just targeting our order block. And the reason this order block is important is because I actually predicted somewhat of a crash that took place earlier in the month from here, and we saw quite a substantial decline. The decline was in anticipation of this level of liquidity down here, and we didn't quite reach there. We actually had a bounce, and this bounce was in this level right here, which actually happened to be what we like to call a demand zone, an area of demand, or an order block, however you want to call it. We had this area rebound price higher, but the reason why this bounce is not necessarily a true bounce is because we didn't manage to sweep our liquidity levels down here, and that means institutions are in a way forcing prices higher so that they continue to offload their positions from higher prices. And so as we go into the week next week, and as we go into the month of December, my belief is we begin to get the selling pressure and the selling momentum from above here. There's actually a chance that we do actually spike higher, spike this level here, take the remaining liquidity, potentially even sweep liquidity that's resting at the high of this order block. And then as we sweep the liquidity higher, we then see an aggressive decline down in an attempt to target liquidity levels intraday that has not been met. And these lines that you see on this chart, this line here, and there's two lines here, as well as some of these other lines down here, are all liquidity levels being built up by institutional investors. They're waiting to be able to sell the market down and target all of these levels of liquidity. And by liquidity, what I mean is everyone who is positioning long and buying into the market here. All these people who are anticipating bullish momentum going forward are going to be used as exit liquidity for the institutions who are looking to sell, and they will be targeting the buyers who bought in this area as well. And that's why it's so important to note that everyone who bought pretty much going into Q3 this year, so from October or September we can see liquidity, but pretty much from October, if you bought in October, you're about to have all your stop losses taken. And this is why I believe that this is the beginning of somewhat of an aggressive decline, because if we hop onto the weekly chart and I remove everything off here, we can see that a decline down to those levels will actually force price into a bearish overall trend. And so my belief is, going forward, we're about to have somewhat of a massive crash. This could lead into somewhat bearish movement into next year as well. And so I'm not very confident that we'll see a lot more buying momentum going forward. I think December could be an extremely red month, as well as early into next year, Q1 of 2026 can also be extremely bearish. And so once again, I want to point out to you guys that there is a whole bunch of liquidity on the downside that needs to be taken, but the idea is institutions are trying to force price higher into this level of into this order block level in an attempt to sell price from from higher levels and get the best reward for their buy trades and position short potentially, or just offload their long positions. And so going forward, I'm expecting quite a lot of bearish momentum going into the new year, or going into December and potentially into the new year. That being said, obviously, we have quite a few catalysts going into the month of December. We have a Fed rate cut decision. That's going to be an important catalyst as well. And so we might not see any of this bearishness take place until after the rate cut decision. And depending on how aggressive they are on the rate cuts, will potentially determine whether or not price goes down aggressively, or if we somewhat consolidate in this area before we end up going higher. And it's all going to depend on the Federal Reserve's decisions going into the new year. And if they fail to provide the necessary support for the markets, we could see this sort of price action where you see price consolidate inside, sweep liquidity to the upside, and then we begin our descent lower to target our levels of liquidity resting at all of these levels. Nevertheless, I've called a lot of the market crashes over the past couple of years. This year, I called the April crash. That's on my Trade Shield channel. I also called the October crash, or the November crash that took place over the last couple of weeks. And so now, as we see price rally back higher, I'm also calling for another crash going into the month of December. And so we'll keep an eye on that. Feel free to hit the subscribe button. I go live every day, 8:30 Eastern Standard Time. If you want to see how I position and actually execute and make money from these trades, feel free to tap in. Nevertheless, take note.